Hi, welcome to another episode of the Jargon from Reyker. My name is James Chu. I head up the market and investment team at Reyker. Today I want to talk about a term called active management. Have you thought about what happens when you invest with a fund manager? Have you thought about what happens to your money next? Obviously, the fund manager will buy some stocks, bonds, or other asset classes that they have selected using your money and construct a portfolio. There are different ways to construct a portfolio, but more importantly, the fund manager needs to make sure that the return and the risk of the portfolio matches the objectives of the fund. So there are two steps involved. First step, the manager will select what type of stocks or bonds to include in the portfolio. For example, should he buy HSBC or BT? Should we buy US Treasury government bond or an emerging government bond? This is a selection process. Secondly, after selecting the stock or asset class to include in the portfolio, the fund manager has to decide how much each of the investment is in that portfolio. That is important. The weight of each investment in your portfolio determines ultimately the overall potential return and the risks. Something that has a higher potential return will have a higher price fluctuation and therefore a bit higher risks. So by adjusting that weight, they will make sure that the portfolio meets your risk and return objectives. Managers who do this apply different analytical skills, and often we call them active managers. They're called active managers because they're actively adding value to your portfolio, enhancing the return, adjusting the risk using their skills. Active managers need to be measured in performance because by actively selecting the stocks or bonds to go into, by actively adjusting the weights of your investments, they introduce different risks there. There are different measures to look at these risks versus return. And future Jargon Buster videos will talk more about these measures who will help you to look at active fund managers.